Okay.
Hey, good morning, everybody. It is April 12th, 2024, and I want to introduce you all to Tyson Schoeff. Um, Tyson is in a payroll company called Heartland. We were discussing payroll issues the other day, and he um, introduced me to two tax programs that I got so excited about, which tells you about the quality of my life that I'm getting excited about tax savings. But I thought I'm important enough to get Tyson on here to do a video. So if you're getting this video, I think you need to speak to this guy and explore these programs because we've already tested on one small restaurant and the savings were significant. So Tyson, thanks for doing this with me this morning, and it's all yours.
Hey, Mike, thank you for inviting me. Truly, truly appreciate it. And the cool thing is, if you're excited about it, that tells you. I mean, I'm a self-proclaimed payroll nerd,
Mhm.
right? I've got 35 plus years of business consulting experience, and when I came to Heartland and focused entirely on payroll, tried to bring that experience and dive into the benefits that I could provide to my clients,
Sure.
right? And so I've picked up a ton of things along the way, but let's start with this one because I know that this is the one that you're really excited about. So I'm going to go ahead and do a screen share. Um, Hopefully this will pop up. All right, do you see this real quick?
Yeah. So this is the work opportunity tax credit.
Yeah, let me see if I can maybe make this a little bit larger. Okay, so let me explain this because this is gold. I mean, there's no question. It's phenomenal. It's for any business that is a for-profit business, and it only pertains to new hires. This came about back in the late 80s. Bill Clinton actually signed this into law. That tells you how long it's been around. But my guess is nobody's heard about it. And the reason why is it's extremely complicated. Your main companies, ADP Paychecks, they won't even talk about it until you get at least 200 employees in an organization because it takes some serious technology. So let me explain this to you, right? Um, about 30% of the workforce qualify for this. If a business hires somebody who, maybe they're a retired veteran or they've been out of work for 6 months or longer, or maybe a felony conviction. There are a ton of people in the state of Florida alone. 11.7% of our population, believe it or not, have felony convictions. We're surrounded by a bunch of felons. Now, the thing is, the majority of them, they just did something ill-advised when they were younger, right? Nonviolent, but it's difficult for them to find work. Anybody who has a disability, anybody on any type of government assistance to help support the family, like the TANF program or SNAP, et cetera. And then a couple of other caveats jump in and out, and that has to do with hiring elderly people, anybody over 65, or new hires. When I say new hires, under the age of 18, right? Of course, it can't. You remember, anybody that has been out of work for 6 months or longer. So if you hire somebody that hasn't had a previous job, good chance that they're going to qualify, right? But it starts with asking the questions to identify if somebody qualifies. And here's the first trap, Mike. You can't ask the questions during the interview process
Right.
because
Right.
if you do,
Yeah.
you're putting a bullseye on your back for a discrimination lawsuit if you don't hire that person, right?
Mhm.
Um, the second thing is you have to produce paperwork and send it to everybody's best friend, the United States government. And then they have to approve it, deny it, or send it back saying, hey, we need more information, right? The third obstacle, assuming that they do approve it, is that the employee has to work for 120 hours before it kicks in, but it's retroactive to the first hour that they worked, right? So
120 hours is what? For a month?
yeah, 3 weeks of 40 hours a week, or,
Yeah.
in the restaurant industry, many people in the restaurant work 30, 35 hours, so maybe 4 weeks. So it's not that long, right? And this is simple math because we're the only company, Mike, that has the technology to automate this entire process, start to end, for small to medium-sized markets. You'd have to
Yeah.
jump
Let,
up.
let me let me pause you there. So,
Yeah.
I know of people who these particularly small businesses, they don't know how to ask questions without getting themselves sued. I know of one restaurant that has asked questions and has twice been sued for discriminatory stuff. So, FYI, call Heartland, the computer does it. So you're legally covered, so you don't like this wild savings you get doesn't get thrown into the trash bin because you had to pay for an attorney. So
No question.
Right.
HR is the tail wagging the dog these days, and we have a phenomenal HR solution. If somebody wants to go down that path, that would be another video, which I'd love to do. But if there's a need for that, best in class, phenomenal. But in regards to this, yes, if you can allow your technology to automate the process, no question, that is the best thing you can possibly do. So let's take a look at the implication of this. Again, 30% of the workforce qualify. The credits range from $2,400, as you can see here, up to $9,600, depending on why they qualify. For example, a retired veteran that's been out of work for 4 weeks would be $2,400. But if that veteran was diagnosed with PTSD or some other type of disability, it'd be $9,600. Okay, so let's just start with 2,400, right? Now remember, in the United States, on average, 30% of the population qualify. This is going to vary based upon type of job, obviously. I mean, if you're looking at a law firm, you're probably not going to get as many people to qualify. But if you're dealing with restaurant, trades, lawn care, I mean, plumbing, HVAC,
warehouse distribution,
100%.
Yeah,
you're going to
by
get
the
a lot
way,
of
you mentioned veterans. I just Googled, there are 7.8 million veterans as a function of the global war on terror. So it used to be those of us who wore the uniform were a rarity. We ain't a rarity now after the last 20 years. So there's a ton of folks out there in the prime working age, 50 and under, that are veterans. So
in the network group where I met you, I mean, you take a look at all the veterans that have ascended into the different positions. Michael Crone is an attorney, right? You've got a person that's a mortgage specialist. I mean, we could go on and on and on. So yeah, even in the white collar jobs, you still have people that qualify clearly. But naturally it's 30%. So that's typically the number that I would use. And that's what I would recommend that your people use when they're out in the field, but it's pretty simple math. So you take 30%. And then the question is, how many people are they hiring? Right? So if you have a small business, maybe they're hiring 10 people a year. Okay, again, easy math. 30% of 10 is 3 times $2,400, which again is the minimum tax credit. You're looking at $7,200 a year.
Yeah.
Right?
Look, this is so important. I know you're about to talk to some young lady I referred to who has a lawn care service, and she called me yesterday looking for a line of credit. And she's about to borrow money when things like this would probably negate her need to borrow money, because she needs about $10,000 to $15,000 to cover her gap. She's in the lawn care business. We're going into season. She's got a cash flow problem because as she invoices, this solves that problem right off the bat. Another $10,000 in your pocket. It's a huge weight off people's heads. It's not chicken spit, as we say.
No, it's not. Now here's how it works. I described the fact that you got to ask the questions, you got to apply for the government. The employee has to work for 120 hours. By the way, you need to apply within 28 days of hiring the person. So this is not for existing employees, only for new hires. And I mean, the government, they're not messing around with this. You got to apply within 28 days.
Yeah.
And so our software, one of the things that differentiates us versus a lot of other companies is that when it comes to hiring employees, we turn that into an electronic process.
Mm-hmm.
So on the front end, when you get our software, and this comes with our base software, by the way, so no add-on to it, you have the ability to go in and set up job templates of the type of people that you would like to hire and what documents or questionnaires would you like to send out. So, obviously you're going to want to have them complete the W-4, the I-9. You can use a phone to take pictures of 2 pertinent IDs to import in the system. Maybe you want to get a signature on a job description or disclosure or an employee handbook, etc. But then we have the ability to attach a questionnaire for this, which is all electronic. So when you hire that person, that data, all of that data imports in the payroll software. We're eliminating all of that data entry into the payroll software. And, I don't know if you've ever recently looked at somebody's handwriting, but if you were looking at my handwriting, you'd think that I should have been a doctor. And then another thing is that employees tend to leave out information that's really important. And I can give you a perfect example on the I-9. If somebody doesn't understand something and they leave a field blank, if you're ever audited, if that company is ever audited by the Department of Labor, it's a $200 fine for every single missing field. So our technology ensures that everything is completed. It stores all that data, but then it populates the payroll software. So in our software, in the payroll manager or administrator, whoever would go in, and we would see that new hire, and it would say, hey, John Smith, we believe he qualifies for, $2,400, $5,400, $9,600, whatever they qualify for. Do you want to apply for the work opportunity tax credit, known as WOTC, by the way? So I'm going to refer to it as WOTC. If you say yes, Mike, we charge a flat $299 fee.
Right.
Our competitors are charging 15 to 20%. So you do the math, we're cheaper, but theirs is not integrated if somebody wants to take a look at this, right? And it ties to payroll, as I already explained. So it's a mess. And that's why nobody has heard about it. We're the only company that's automated it beginning to end. So here's a cool thing. We produce paperwork, we send it to the government. If the government denies it, we refund the $299. We are guaranteeing that business is going to get this tax credit, or it's not going to cost them a penny. Right? So let's do easy math. Let's say you hire an employee. We identify John Smith qualifies for $2,400. Remember, John has to work for 120 hours before it kicks in. So 120 hours, let's say that you're paying John $20 an hour, which is pretty common these days. Easy math. 120 hours times $20 is $2,400. This accrues at 25% of the employee's pay. So at 120 hours, 25% of 2,400 is $600. We charge $299. That business just made $301.
Sure.
Make sense?
Yeah.
It's going to accrue or continue accruing at 25% of that employee's pay until they either hit the maximum that they qualified for, or once they reach 400 hours, which again is only 10 weeks, 2.5 months, at a 40-hour work week, the calculation will accelerate to 40% of their pay instead of 25%. So it'll accrue that much faster, and it will continue accruing until they hit the maximum that they qualified for.
What's the max?
Go ahead.
What's the max?
The 9,600.
Okay.
9,600, and it's one time. In other words, you don't get this every year. Once you hit that maximum $600, boom, that's
But it's
it.
$9,600 on that one employee, and then these
Correct.
service businesses, employees turnover. Like, it's not uncommon to see a turnover after about a year, right? Because they're leveling up in their career, and you hire another one. You get to start the process all over again and get another tax credit. We're talking about points of profit, on a macro level that are being left on the table.
Oh yeah, 100%. I mean, I've had companies that the turnover helps drive the additional revenue of this, right? Yeah. And so it's pretty amazing. So in a nutshell, that's how it goes. However, you have to be asking yourself, man, what if I could ask those questions during the interview, right? Man, because that's where we're stuck at the 30%. We're stuck at the 30% because we can't ask the questions. We know 30% of the workforce qualify.
Right.
But for every job opening, how many people are applying?
Look, when I had a landscaping company, better than 50% of my people had a criminal background.
Yeah, right.
And I knew that, and I was okay with that, and there was no place else for them to go. And I mean,
let's talk about that real quick. If anybody has a stigma for hiring somebody that has a felony conviction, I will push back on that, because again, the majority of them did something ill-advised, nonviolent when they were younger. Number two, because they have that mark on their record, they're trying to do everything they can to keep their nose clean because the penalties a second time are stiffer, and they know that, and they do not want to go back to jail. So I actually have companies that they actively seek out people who have
I
felony
did. I
convictions.
did. You know, I've been in the military. I knew how to handle a bunch of men with attitude problems, and we actively sought them because they had a work ethic. They were trying to get clean. We actually had a house for them to live in, and we did all these things. And I mean, some failed, but you just kind of factor that. But when you add up the math here, I mean, I look, I had 200 guys, 50% had background problems, right?
Right.
You know, my payroll was 75 grand a month. I'm kicking myself in the ass right now going, I left money on this. I pay tax, you know, all because my accountant didn't know about this credit and my payroll company was somebody other than Heartland.
Right. Well,
It's a not knowing.
most accountants don't know about it. And even if they did, they can't take it because remember, you've got to apply for this within 28 days of hiring that person.
Right.
So the
And they're
accountant
not
has
doing
nothing
that.
to do.
These little, you know, these people go. So if you go cheap on your bookkeeper and your bookkeeper doesn't have the staff and isn't smart enough to know about this, and you don't have an automated system, they don't have the bandwidth to do this stuff for you, and the seller doesn't. So it's wonderful the government writes these programs, but generally nobody wants to do the work behind it. So,
Right.
but automation solves the problem.
Yeah.
Right.
Yeah. And somebody knows what they're talking about.
Right.
Yeah. Yeah. So, all right. But nonetheless, you still have to ask yourself, what if you could ask the questions during an interview? How cool would that be? You've got 10 people applying. Again, re-engineer the math. Out of these 10 people that are applying, 30% qualify. You're going to identify 3 people during the application. So you could really raise your rate. What if we could get your rate instead of 30% up to say 75% of the people you're hiring? Look at this number now. We're at 18%. Remember, $2,400 is the minimum tax credit. The average tax credit is $4,000. Look at this. We're up to $30,000 now for just hiring 10 people, right? The maximum tax credit is $9,600. That would put us up to $72,000. Here's where it gets real fun. We have an optional upfront applicant tracking system that helps companies find employees. That's one of the biggest issues we hear nationwide. It's difficult to find employees. So think of it as an electronic funnel with automation built inside. You create the job description inside our software, and then what websites are you wanting to go to find those employees? Are you using Indeed? Are you using Juju, Monster, LinkedIn, Craigslist? Maybe you have people walking in off the street. How about we produce a poster with a QR code, and when they scan that code, it pulls them in through our funnel. So as all of these applicants are coming in, we are proactively identifying if they qualify for this tax credit. And we can do that because the business owner has no idea why that person qualifies. He simply knows it's qualified.
We went to the parole office.
There you go. Yeah.
And then you go to the VA, and then
Yeah.
you go to the if you're near a military base, go to the transition office.
Right. You can put a tab on the website, apply for a job, and you name it. Yeah, not to mention the fact people walking in off the street pull somebody away from their job, right? So you're disrupting the flow of business if somebody's walking in and wanting to apply. Wouldn't it be a lot easier just to say, hey, scan this QR code and then we'll get back with you, right?
Yep.
And then that allows you to do the background work behind the scenes, gather all the documents you would need, and then you're off to the races, right? So anyway, that's the idea of this.
That's that one. What's the other one?
Oh, well, I'm going to finish up real quick on this. Guys, you don't receive this immediately. This is a dollar for dollar credit against what the business owes in taxes at the end of the year. Dollar for dollar, right? So it's not a percentage of what they owe. If they come back in this situation and the attorney or the CPA says, hey, great news, you had a great year, but you owe $72,000 in this situation and have a $72,000 credit, owe nothing, right? So it is gold. It's also bankable for up to 20 years because the IRS knows that businesses, what they owe at the end of the year, they may have had a remodel, may be able to write things off. You never know. Maybe open up a second location.
Right. So let's transfer that to the layman. It's like you could apply that credit to the year following or the year after, right? So
100%, or 5 years down the road, you have it, you bank it when you need it. It is there for you.
Yeah,
right?
I mean, I just got a credit from 2020 in my mail. So, because the IRS is behind, go figure, right?
So it continues growing. Okay, the next one is really exciting for restaurants. And the reason why it's exciting for restaurants is every restaurant is going to get this if they take it. It's called the FICA tip tax credit. This came about in 1973. The IRS was going after restaurants where their highly tipped employees were not properly reporting tips. And so the IRS was penalizing the restaurants. And the National Restaurant Association, the NRA, went to bat for the restaurants. And they said, hey, this isn't fair. You know, we can't force people to report tips. And the IRS said, we want our money, right? We need to do something. And so this is what they came up with. First of all, if the restaurant has proof that they've educated the employee on properly reporting tips, and the IRS comes to audit the restaurant then, if they have the documentation, it's got to be legal. I mean, remember, HR runs the world. The restaurant then will bypass, or the IRS will bypass the restaurant and they'll go on to the employee, right? But to put teeth in it, they added this additional caveat, and that is if the restaurant is willing to keep track of the tax or the tips paid to the employees to make it easier for the IRS, any tip that takes an employee over $5.25 per hour, the restaurant does not need to pay the FICA tax on. Guys, FICA is a combination of your Medicare and your Social Security. It's 7.65%. Now, when this was written, virtually every state, most restaurants were paying a base wage of $2.18 per hour. Believe it or not, there's still some states that do that. But most states don't. Most states require a much higher base wage, right? So in Florida, the base wage is $12, and there is a tip credit only for tipped employees that a restaurant could take to get their base wage down to $8.98 per hour. But $8.98 per hour is still over $5.25 per hour. So let's do the math. Let's say that a restaurant has 20 employees and 15 of them are tipped, right? And let's say that they're paying a base wage of the minimum $8.98 an hour, right? Now the question is, what are the average weekly tips per employee? I had an ice cream shop that they were averaging $100. This is an ice cream shop, $100 per employee, and the employees working on average 30 hours a week. So we were looking at $397.80 in a tax credit for each employee, or in this case, $5,967. Now that's for only $100 worth of tips. How about the restaurant that I did recently that was averaging $700 in tips? It's a steakhouse bar and grill. Look at this number, $2,784.60 per tipped employee, $41,769 a year, guaranteed back to that restaurant. Now, like the work opportunity tax credit, this comes when you file your taxes at the end of the year. We will produce the report for the company to give to their accountant or their CPA. And it's amazing still how many accountants and CPAs aren't aware of this. A lot more of them are aware of this than WOTC, because WOTC is so convoluted. But here's a problem. Let's say that you have a really good CPA or accountant, and they understand this and they're taking this for a restaurant. Unfortunately, HR litigation has gone off the rails. So let's say that the Department of Labor comes in, or the IRS comes in and says, hey, you don't have the proper documentation for this. Guess what's going to happen?
You gotta owe it.
You're going to owe it back, plus penalties, plus interest, right? So when that accountant or CPA thinks that they're doing something good for the business, what they're actually doing is putting a bullseye on their back, because you have to take care of the legal side. And that's
how do you guys do the legal side? A video on the front end?
No, actually, remember when we talked about the electronic onboarding?
Right.
Wouldn't it be cool if we could attach a document for tip disclosures and
yeah,
right, and get a signature from that employee? So now we have a signature as they're approaching us. Now, if they have our HR solution for existing employees, we have an employee landing page that we can get updated signatures on an annual basis. But yeah, I mean, from the most basic, we can make sure that we are crossing the T's with the company. Make sense?
Yeah. No.
So
No, hey, look, there's no excuse not to now that you could just sit them down half an hour. Here's your email. Click through this program. You get the data log. There's your paperwork that covers your ass. And when the IRS comes a knocking, get out of jail, leave me alone. Yeah.
There's also the potential lawsuit from the employees, because this has happened where an employee said, you did not disclose to me that you were taking this tax credit, and sued the restaurant. And
lawyers are wonderful on that, right?
hey, I read a statistic. It depends on the source. This was, I like I said, I'm a nerd when it comes to payroll. So these are things that grab my attention. 35 to 53% of all small to medium-sized businesses are involved in litigation of some sort every single year.
No, I read an article last night about a 70-year-old restaurant in California, in San Francisco, that got shut down because of a guy sued the company. I mean, and they couldn't afford to fight the lawsuit, so business gone. I know of two where I live that the employees.
In 1986, I think it was 86, there was a law case, the verdict of which shifted the burden of proof from the employee to the employer, meaning that businesses are guilty until proven innocent.
Right.
How scary is that? And that's why.
And the comment to business owners is, you're not going to win that fight. That's a political fight. What you can do is document and have your paperwork. Let the lawyers fight it out. In my world, you're only as good as your paperwork. You have your paperwork, you're going to win. So it's a pain in the ass if you have to do it by hand. But if you got
our HR solution, if they implement it, backed by a team of SHRM certified HR specialists, we even have in-house attorneys on staff. We help companies do it the right way. Again, that's a different video, but in regards to this will pay for it. And so this is what I'm doing. I'm going into restaurants and I'm saying, hey, let's do it all the right way. And I will show you how we will not only pay for the entire solution, but we'll put money back in your pocket. How smart is that? We're going to protect your business and we're going to make you money in the process.
Yeah, I'm just pulling up the corporate tax rates, right? For 23. So I forget what the thresholds are, but let's just take, you're a large restaurant, you're making $400,000 a year. You're at the top, you're probably in the 30% tax bracket as an S Corp. And you probably got I don't know, how many employees, 50, and say, so between those two tax credits, you lower yourself a tax bracket. So instead of 30%, you're paying 28%. So there's multiple savings in here. If you deploy, I mean, I always joke with people, I'm not going to go political. Oh, Donald Trump doesn't pay his taxes. I'm like, remember that scene where he's like, you guys made the law. I just have really, really smart people who know how to use the law. And this is the stuff that people don't know about. Yeah.
Right. Exactly right. And that's why, to me, it's so important. And you got to have the technology, right?
Yeah.
You also have to have somebody that knows what they're talking about. And to me, the fact that I have 35 plus years in business consulting experience, these are only two of the tax credits I know about.
But we did a small restaurant, right? They're doing like $500,000. How many employees did that guy have?
They had 10.
10. And we got him what?
We got him $8,500 in tax credits. Yeah,
10
and that's not WOTC. That's just a FICA. So now anybody he hires that qualifies for the work opportunity tax credit, anywhere from $2,400 to $9,600.
And who did he have for payroll?
He was using he was using paychecks.
And you saved him how much on payroll?
On payroll, we ended up coming in at about $10 less per payroll. So it wasn't a huge savings on the payroll cost, but and in some cases I'm going to be more expensive.
It was $8,500.
Right. Yeah. In some cases,
that guy makes like $150,000 a year. You dropped him a tax bracket, is what you did.
Yeah.
So you're not, the $8,500 does not include the tax savings on the net tax on the S Corp.
Right.
That's only the tax savings on the payroll.
Right.
Yeah.
Well,
that's awesome. See how I don't even espresso this morning.
Here's man, latte every single morning, guys. Latte every single morning. I cover the entire country. It's a web-based product. I do demos and needs analysis online. So anybody that wants to bring me in, I am more than happy to do that online meeting. I have a Calendly that I can send out. So if you're trying to get something scheduled, I can send you my Calendly, and you know exactly when I'm available, and we can get it scheduled. And I mean, it's easy. It's easy.
So if I'm going to send this out to a bunch of folks, what's the best way for people to get a hold of you?
My email is my first name and last name, as you can see right here, Tyson.Schoeff. So TYSON.SCHOEFF at e-hps.com, Heartland Payment Systems, hps.com. My cell phone is 615-482-4648. And anybody is more than welcome, to call me. Obviously, I want them to identify that they're under your umbrella, and then that gives me an idea of how we need to, a little bit of how we need to approach this. But the more that I learn about the organization, obviously, is it a new location, or is it an existing location? How many employees do they have? How often are they paying those employees? If it's an existing business, who is the current provider? This is another thing too. And the reason why that's important, ADP and Paychex, which obviously are the two largest payroll providers out there, they can discount considerably more than I can on the front end, but the discounts are temporary. I've even seen offering 3 to 6 months free payroll, but there's a catch, right? You pay a month, you get a free month. Pay a month, get a free month. And if you're disgruntled with their service and you try to leave, you got to pay back the 3 months, right? Their sales reps get paid one time, and that's on the front end. And as long as the company runs 2 payrolls, that sales rep will not lose their commission. Guys,
By the way, they pay referral fees, and I don't use either of those companies because this stuff is what matters. It's like if you think you're saving money because someone's giving you a discount for a couple months, like that's a win, and then you left $20,000-$30,000 in tax credits on the table, then they didn't do their job. You're turning to them as the experts, and clearly they're not. So people are honest through omission, right? So, full disclosure, this is how this works. The reason I'm doing this with you, for everyone that's going to get this, is I try and add value as best I can for someday you're going to use me to sell your company.
Right.
And if I make you more profitable, I'm going to make more money later. Oh, by the way, so are you. And so here's a value proposition here. I helped you. You're not going to talk to me for 3 to 5 years, but you're going to reap the benefit of that time. And by the way, that's going to more than compensate for what, the service I provide later on. So we're all in it to make a buck, but this is what the value is.
I don't know about you, Mike, but most of my clients come from existing clients. They refer me, right? They refer me because they know that I take the time to do the right needs analysis and consulting. And remember, how paychecks and ADP are paid. My pay, conversely, is an ongoing monthly residual as long as somebody stays a client. So I have vested interest to help them be successful, help them grow. If I can help them grow, for every employee they add, I make a little bit more money. But if they leave us as a company, I make nothing, right? I want them as a client, so I'm making money 5, 10, 15 years down the road. And so if you're wanting a company that's truly going to take care of your clients, right, that's going to be a reflection on you, right, to help that client use you again in the future if they're wanting to buy another business, or even refer you if they know somebody else, because the business community, as you know, is small. I mean, everybody talks, right? So one person says, "Hey, I'm thinking about selling my business. Do you know anybody?" "Yeah, I got a great guy," right? And that's because as a business consultant, you guys took care of them, right? So anyway, it's win-win-win. Everybody comes out a winner with this. And again, there are many other ways that we can help companies save money. These are just the 2 tax credits that you wanted to take a look at. For obvious reasons, right? It's low-hanging fruit.
These are massive for small business. Hey, Tyson, thanks so much for doing this. Again, this is Mike Shea. If you can't get a hold of Tyson because that email is rough and he has a funny name, get a hold of me and I will connect you with Tyson and get you set up. So I'm always at 321-287-0349 or Mike@tworld.com. Have a good one.